Hi, I'm Brien Lundin, and I am at the January Vancouver Metals Investor Forum, and I have the great pleasure to be talking with Tara Christie of Banyan Gold, an exceptional company that's in my gold newsletter portfolio. Tara, you just keep finding more gold, you just keep advancing that project, and if you look at in the universe of junior mining companies. And one of the themes that I keep talking about in Gold Newsletter is that this market has overlooked the big resource companies. They have not been revalued in terms of the gold price.
Absolutely.
And if you look across the broader universe, you can find bargains just waiting, lying on the ground in front of you, figuratively. None, I believe, more of a bargain than Banyan Gold. 7 million ounces of gold valued at about $5 an ounce in the ground. I mean, in a market or in markets where typically these kinds of projects are sold at $100, $150 an ounce in the ground, the upside looks extraordinary. But I don't want to get ahead of you. You tell me what makes Banyan Gold so special.
Well, 7 million ounces
Yeah.
is very unique. There are
And that's
very
not the
many.
end.
That's not the end. We've
by
got
any
lots
means.
of upside potential.
Yeah.
I can arm wave and see, and I feel comfortable saying we've got the potential for 10 right around.
Yeah, a
the
lot of
power
other
line and
people
the
have done the
airstrip.
same thing and see that as well.
And they see more than that.
Much more,
So, and then there's at depth. That's just on surface
Yeah.
potential. So, this is a generational asset. When a mine is built here, if a mine is built here, which I think the potential is high,
Yeah.
it'll run for a very, very long time because
Yeah.
that's a very large gold endowment. And to be in a safe jurisdiction, North America, with stable political regime, that's pretty unique as well. And then we're in the center of this district, and
Yeah.
there's the assets down the road, which combined would give over 15 million ounces to a major. Like our ounces alone would be
Right.
significant to the balance sheet of any major.
Yeah.
But that, where you could potentially be a 400,000 to 600,000 ounce producer within a 6-year timeline, there's not very many projects which have that kind of potential for production in a short timeline, which the majors need. They haven't replaced the reserves.
And you have been packaging this company and this project up for the majors. I mean, wrapping it up in a pretty bow. You're checking off all the boxes with social, with permitting, with technical studies, and understanding the deposit. And I want to touch on a couple of things there. One, if there was a knock, it was grade. Where is your higher grade starter pit or area? And you've solved that. You've checked that box off as well of recent drilling. Tell us about that.
Yeah, our recent drilling actually, I think, is exceeding our expectations. The goal was to, drill out the areas for our PA, so roughly 10 years of mining areas where we can find, that roughly 1 gram material for a starter pit. You
Yeah.
increase the cutoff grade and you stockpile lower grade and you mine the higher grade ore and maybe even some 1.4, because we know that there's significant higher grade ounces within it just from moving the cutoff
And that
grade
helps the
up and
economics
down.
of the project, quicker payback of capital expense, et
Huge.
cetera.
Well, and we get discount. Well, it's all 0.6. Well, it's not all 0.63. And once you've built a mill and paid back the capital, the lower
Right.
grade stuff is gravy.
Gravy,
You
yeah.
look at what Fort Knox. They're mining, run a mill, a
Right.
run of mine now. They're not even worrying about it. They're making money.
Yeah.
So once you've paid back your capital, it's all that. Those ounces eventually could potentially be mined. So we've been working on our geological model, which was something that we heard. So this year we focused on really improving the geological model and showing that higher grade zone within it rather than the expansion. We will add some ounces with this resource update, which we're going to see in Q2 here. We're going to have more drill results confirming, and showing
Yeah.
more of these high grade areas, including from airstrip, which we haven't drilled on since 2020. So remember, it was overall higher grade 0.75, and we left long intercepts of where we had 1 gram material because we just hadn't got back to drilling it.
Yeah.
We saw the growth potential was bigger at Powerline. Well, now that's shifted a little bit because there's clearly some on-surface high-grade areas at Airstrip, and we focused on, remember, this whole mineralization at Powerline starts right on surface too. So
Yeah.
that's a really key thing for your capital cost. Your low strip ratio is lower. We've got this existing infrastructure, including power and roads already on the property. I'm really excited about our PA in the fourth quarter because we're finally going to be able to show some economics.
Yeah, a lot of catalysts. I mean, drill results, the market loves that, but you're going to have that first ever PEA this year. And you mentioned that the deposit starts at service. Talk to us a little bit about mineralization, the geology, because this is not typical for the region. And at depth, there's some potential for a lot more and at even better grades. So let's talk about that a
So
bit.
this is a reduced intrusion deposit created by an intrusion. So like Victoria Gold, that's an intrusion deposit. Snowline, they found their intrusion.
Yeah.
Sitka, they found their intrusion. We're in the rocks above or around our intrusion, and we haven't found our intrusion yet. And so it's like, it's not just worrying about finding the intrusion, because this is a very significant amount of gold
Already.
that's mineable.
Yeah.
We believe it's economic,
Yeah.
but that is a target. Absolutely. And we know this mineralization, that the whole resource
You know
is
it
within,
goes to depth because
do.
you have deep holes, just haven't found that intrusion yet, but still it does go much deeper than you've currently outlined.
And we've done a bit of work this last year on that. You know, the whole pit's 200 meters. That deep hole you talked about, 650 meters, and only one. We know we could drill a few more, and you know, you show that that's over kilometers. You have mineralization to depth. That could be very exciting. But we also did some geophysics, some 3D geophysics with the geological model in mind, which will has given us proximal targets and extensions of mineralization to both airstrip and power line. And then we flew a ZTEM survey, which looks deeper and typically, you know, is used to find these intrusion-related deposits. So we have some targets for that. We're getting some more advice
You've gotten
on
the results
that.
back from that?
We just got it back right before Christmas, and we've been really analyzing it, and we're getting some other experts engaged here to give us some, because those can be deep holes, they can be expensive. Sometimes you have to calibrate based on geology. It's not just, you know, draw here for the map for intrusion, but it might be. So that's what we want it to be. So let's get a few eyes of people smarter than us and bring in some different ideas and then put our drill program together.
Yeah, I've been impressed with the level of technical expertise that you brought to bear on the project, really from the beginning. But there's so many different aspects that are exciting about that those geophysical targets coming up. It's not like you have to, I mean, you have the luxury of pretty much doing what you need to do and want to do without having to go back to market to raise money, because you're very well capitalized right now.
Yeah, and we've been very careful. After the incidents of last summer, we did scale back a little bit of our program. I think we were still able to achieve what we wanted to. We wanted to have a little bit more margin of error and drill holes just in case the geology doesn't quite prove out. But I'm happy with what we drilled. You know, we came into this year with $11 million. We'll have revenue again from some of our rentals and services, which, you know, covers some of our G&A. But that's a lot of money for us, because most of our costs of our PA, we've already done significant scoping studies and optimization work. So we really need to just wait for the resource update. So our PA is not an expensive endeavor. That's great. That gives us room to drill this year as well on some of these targets. And right now we're thinking the focus should be to show that 10 million ounces plus, show some mineralization at depth, and maybe take a drill at a few targets that might be really exciting. But we want to work on that a little bit before we announce the actual plans.
Well, let's close out with some of these catalysts and kind of list them up. Drill results, resource update,
Start drilling,
geophysical results, I would assume, at some point in there.
Yeah, we might not play all our cards.
Okay, there you go. Don't use all your ammunition.
Don't use it all quite yet. But yeah, we will be using those. But then after that, we'll have the PEA. And then we'll have the drill results from this year's program. So, you know, a PEA is a waypoint in time. We're going to be able to demonstrate some strong economics with lots of room to grow with the results that we have from this year. And, you know, just because we found power line and airstrip first, does that mean it's the best on our property? We have 300 square kilometers of land to explore, and we've really only drilled maybe 5% of it, and some of it we haven't even taken a soil sample on. So, you know, that's where the geophysics and the ZTEM came in, is that there's lots of known placer mining all around this area, including on our Nitra property, which are one of the strongest signals that there's a potential source around.
Yeah, it really is packaged. It really is kind of the perfect property for a major, because you want a big deposit that's going to move the needle for a major, but a major always wants to have that upside, that mystery, a little bit of mystery, a little bit of upside left in the project. And with that land position, you certainly have that. The valuation, I mean, really, you could have a significant re-rating, very profitable for shareholders re-rating, and still be dramatically undervalued from these levels. It's going to happen. We know we're in a new gold bull market. We know that these valuations are going to flow to the junior sector eventually. And I can't think of a more undervalued and primed for re-rating project out there, a company out there than Banyan Gold. Tara, thank you so
Thank
much.
you.
I really appreciate you
it.
being with us.